My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
Welcome back, gang. Today, zooming in from Saratoga Springs, New York, Todd Bailey, who has got 8 years under his belt in real estate and then now is making the big jump into becoming, I believe, a full-time real estate syndicator. So Todd, welcome to the show. Great to have you.
Thank you, Dave. Nice to be here.
Yeah. So Todd, tell us a little bit about what you were doing before in real estate, the last 8 years, and why you're getting into syndications and multifamily.
Yeah, so I actually had a 20-plus year career in high tech in the semiconductor research and development space, and most of that time leading R&D teams. In the last couple of years, I managed an AI team, and along the way, of course, like most people, I've saved for retirement, all of that in the stock market, and became somewhat, say, disillusioned with trying to pick stocks and beat the indices. And so 8 years ago, we started investing in private equity real estate and really just fell in love with the asset class. It's a real asset, brick and mortar asset, and the returns are good. And the more we learned about investing in real estate, the more we liked it.
Very cool. So what kind of properties did you invest in?
We invested in a sort of property fund, a brick and mortar property fund. In the last 8 years, this is in total, right? A land entitlement fund, several syndications, 5 syndications in total. One of those is industrial flex. The rest are multifamily. They're all doing great, thankfully. And we also bought a small multifamily that we owned, self-managed, and recently sold for a profit. So hallelujah, right? It was a great experience to learn about.
Well, it sounds like you've had some really good fortune with those investments, or a very good eye for picking them. A lot of other passive investors, especially in multifamily the last few years, have got the crap kicked out of them. How did you avoid that? Or was that a bit of luck? Or was it you had an eagle eye on things and kind of saw what was coming down the pipeline and prepared accordingly? How were you able to weather that storm?
I think it was luck of the draw. The funds are doing fine. At the time we had the one brick and mortar real estate fund, and we had our own property. And I had the industrial flex property syndication that I bought into in 2021. Just before things started to turn south mainly in the multifamily space. The other syndications I joined were later, sort of after the correction.
Oh, I see. Okay.
So that saved us. So the 3-family we bought in 2022, we bought purely as a rental property, and we sold it as an owner-occupied property. So it changed the economics a bit. And that's how we were able to capitalize on that property.
So Todd, you're telling me a little bit off camera that you've made a big career shift lately. Tell us a little bit about that.
Well, my wife and I started our syndication business last year. We like real estate. We really believe in the ability for investors to make good returns in real estate, in addition to what people do in the stock market. And we decided that this was going to be our path to exit our W-2 jobs.
Wow.
Over the next couple of years, right? So I was a victim of corporate America early this year and decided to just pivot and focus on this full time. Of course, I had opportunities to go back into corporate jobs, and I just made a change and didn't look back.
Very cool. So it's big change going from corporate America, where you kind of got a whole team or a whole company behind you. Everybody's kind of in their lane. They've got the responsibilities. Now you get to be chief cook and bottle washer What's that been like making that adjustment?
It's quite a learning curve, right? So of course we know about the passive investing side. Every deal you learn something new about what to look for in an operator and what to look for in a property. And so that's not changing. What changed is that we had to learn the active side of syndications. And so we joined a mastermind program,
Good.
dove in, and actually joined a mastermind program for multifamily and a mastermind program for capital raising. And so, invested in ourselves and in our own growth. And yeah, it's been a big learning experience. Understanding for ourselves what we really want to focus on. Do we want to go hunt for deals and work with brokers and work with existing owners to get off market deals?
Right.
Or do we want to asset manage and manage the construction and the property managers? Or do we want to focus on investor relations and find investors and pool capital? And so that's where I settled, is pooling capital, finding investors, providing educational content for investors learning about private equity investments in real estate.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
You know what? That's not a bad idea, Todd, especially considering your background. Is your wife is she firmly ensconced in corporate America right now as well, or is she full-time?
She's fully ensconced in her W-2 job. She's a psychologist. So
okay.
not in
Not in the corporate world. She's
not in the corporate world.
okay. Yeah, I think that is probably a really good move for you, because chances are you've got lots of connections still in the folks that are in that corporate world that don't quite get it yet when it comes to real estate, the big advantages of that versus everything else. Now you can show them from personal lived experience, hey, I used to do this, trying to time the market, the stock market and bonds and all this kind of stuff. And now I'm doing this, and here's why this is so much better. Like, you come from a voice of experience there, so you can definitely relate to those folks who are where you were 10 years ago, right? That's
my former self. Exactly. And that's what I call, that's my investor avatar, is the term people use. It's the busy professional saving for retirement. Most of the savings are in tax deferred accounts in the stock market.
Yeah.
There are other investing vehicles that can do potentially as good or better than the stock market. And to me, it's been a really interesting learning experience, finding these opportunities and investing, and now helping others invest in those as well.
So the other side of the coin is finding good people to partner up with who are the more active operators in the deal. Have you met some good ones so far in your journey?
I have, yeah. And we partnered with a team on a multifamily property in Houston, 246 units, Class A, 2018 build. We closed about a month ago.
Congratulations.
Collectively, us and the GP team closed about a month ago. Yeah, really excited. But I've been shopping around for partners, and there are many.
Yeah.
Right. And you mentioned the multifamily correction, let's say driven by floating rate debt primarily, in some cases rising insurance costs.
Yeah.
Some operators were bit by that. And it's interesting, when I talk to people and I ask that question, were you affected by this and how did you deal with it and what did you learn? And some were fortunately not impacted by it, but everybody has a lesson, whether they learned it themselves or they watched other people go through that painful time.
Well, and quite frankly, not to be crass about it, Todd, but if you're talking to anybody who's still doing it, they've kind of weathered that storm, right? So I think that correction just washed out a ton of unprofessional syndicators, they're out of the business. They're bankrupt and their deals have gone south. And so the people that are still actively doing it either weathered it personally or learned big lessons watching other people. Yeah, you're right. So that's good. Awesome. So congratulations on that first one. How did it go for you for the first capital raise?
Good. I had a target. I didn't quite get there. I had some investors who were very interested and had some personal distractions. Everybody does. And what I learned is you have to have, what they call soft commits, about 2 to 3x what you really need.
Yeah. Yeah.
And so this is where I'm focused now, is providing some educational content, mostly through social media. Tonight, actually, I'm giving a webinar and then attracting investors and, going, that's the path.
That's exciting stuff. And here's what you're probably going to see as well, Todd, is once this deal is up and humming along and you keep talking about it on social media and in your newsletters and whatever you're going to be doing, some of those people that were soft commits that didn't pull the trigger before will definitely turn into hard commits on the next deal.
Yeah, that's right. And what's amazing is I thought this was a fantastic deal because at the time we were also looking for deals to syndicate on our own while partnering with other people, but looking for our own deal flow. We were not getting these kinds of deals from the brokers. So obviously the brokers are going after people who have experience.
Of course. Yeah.
They want plus years experience.
Yeah. They want people that can close. So yeah, that's why finding those partners is so key when you're first getting started. Well, this is great, Todd. Well, congratulations. Where do you see yourself and your wife going in the next 12 months? We're at the end of 2025. What do you see in store for 2026?
Our goal is to do a deal every quarter. I think it'll take some time to ramp up to that pace, but I think that's a reasonable goal.
Yeah.
It'll take a while to get that investor base up. We also want to invest our own capital in every deal, so we have to manage that carefully.
Yeah.
And so we're actually looking now for the next partnership, and we're talking to partners about their deal flow. What are they seeing? Is there anything interesting? Should we turn up the pace in our investor communications?
Yeah, good point. Well, I've spoken to a lot of syndicators over the last few months, and seems to be a lot of kind of positive thoughts about where things are going these days with multifamily, with rates coming down a bit, with prices coming down big time since the peak of craziness a few years ago. Yeah, there's challenges with vacancy rates and supply, but a lot of that seems to be getting absorbed. So a lot of feeling like, hey, you know what? There's going to be some really good newer type properties becoming available, especially from some of these folks that were, overextended, over leveraged. Unfortunately, they're going to lose those deals, but that creates opportunity for other operators.
Right. That's right. I'm looking at properties in kind of two domains. One domain is somewhat newer amenities, 9-foot ceilings or higher. They're probably going to have a longer lifetime in the A, B plus range.
Okay.
And the older units, say early 80s, 70s and before, with the 8-foot ceilings and older amenities and workforce housing, right? And that's also going to present some good opportunities for the right operators.
Yeah. Cool. And then you can have, if you're the capital raising guy, then you can work with different operators with different specialties and kind of have different offerings for your investors, right? So that's
exactly.
Yeah.
So
it's all.
Some properties may naturally have a longer hold period, provide more cash flow over a longer period, and others may be a quicker turnaround time.
Very good. So Todd, if folks are listening to this and they're either like an active operator themselves looking to connect with somebody like you, or perhaps they're more on the passive side and they're looking to deploy their capital, where can people find out more about Todd Bailey?
Best place is LinkedIn. Look for Todd Bailey, PhD. I think there's just one of me. That's probably the best place. And from there, you can find website.
Yeah. So Todd Bailey, and you're probably the only one in, what's the name of the town and state that you're in?
Saratoga Springs, New York. It might say my my actual town is a different name, but we're walking distance to Saratoga.
All right. So Todd Bailey, PhD, the one in New York.
That's right.
That's the one. Awesome, Todd. Well, hey, congratulations on taking down that first deal. That's a good one. I think you said 240 units. So that's awesome. And wish you all the best with your doing a deal a quarter for 2026.
Sounds good, Dave. Thanks for having me on.
All right, everybody, take care, and we will see you on the next one.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.